And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Wednesday, March the 16th. I'm John Hoagland. Thanks for trusting me with your time. It's finally FOMC day, the day we've all been waiting for, and it may be one of those days where you need to hurry up and wait. As usual, we're going to be seeking accurate context, good risk management, patience, and acceptance. There's a new word for us this morning. Acceptance. Accept what the market gives us, accept the market's information that it is telling us. 7:30 this morning, economic numbers. The retail sales numbers came out a little bit lower than expected. Import-export numbers also out. Export numbers with a pretty good jump. 8 o'clock this morning, the Ukrainian President Zelensky is scheduled to speak, of course, virtually, to Congress. It's going to be happening as we're in the market forecast here. 9 o'clock business inventories and housing market index. 9:30. These, of course, all Central Time. EIA crude inventories, and 1 o'clock Central, the FOMC meeting announcement, and 1:30 the FOMC chair presser. Yesterday, a little bit of a boost in crude by the API. They were looking, well, it came out a 3.7 million barrel boost in crude stocks. Crude's looking a little bit lower this morning. EIA is looking for a draw of 1.3 million barrels. We'll have to wait till 9 o'clock to see that. In things that traders are thinking about, all eyes are, of course, on the Fed as the cycle of rate hikes begins today. How much, how often, how big? The only thing left in question. The Chinese stock market really snapped back nicely last night when the Chinese government said it was going to promise to support the economy and the markets. So there, apparently the Chinese market, the Chinese government is going to start getting into the markets. U.S. stocks are set to open early, somewhat sharply higher. Ukraine peace talks continue. Again, Ukrainian president to talk to U.S. Congress today. Looks like Russia's going to miss its first debt payment today. And the one thing that I'm interested in that nobody seems to be talking about, hi Lacey, my girl is here looking to get pet. The thing that nobody's talking about is China and the Saudis are talking about allowing the Chinese to pay for Saudi crude oil in yuan. That's going to be a first, and it's something that we should be paying attention to. Lacey, come on, girl. Come on, girl. There's people walking by in front of the house with the dog, and she's mad that she's not out there with the dog. Anyways, as usual, please make sure you hit the lucky like button, share, question, comment, feedback, heckling, and love are all welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Looking at the VIX, the dollar index, and the 10-year yield this morning, the VIX down about 4%, 28.52, back down below that 30 level. Dollar index down a little bit at 98.62. The yield on the 10-year up slightly at 2.175%. 2 1/8. We do have group coaching today. I'm going to put the link in for that right now. That's for group coaching today at 1 o'clock. Being FOMC day, I'm usually going to wait until 1:05 to start that session so that we all have a chance to look at what is going on with that. And then here's the link for tomorrow morning's Make Hogue Money. Make Hogue Money. We're going to jump into a Zoom meeting right after the market forecast. We're going to look at the S&Ps. We're going to take a look and see what we see. If there's opportunities, you guys are going to decide to take the trades, what trades to take, how long to stay in the trades. It's your job to make me money, and I love that. Here's Lacey. Come here. Hi, Lacey. Here's Lacey. Hi, girl. Okay. I know. You're cute. You're cute. You're gonna lick the microphone. Okay. All right. Come on. All right. Let's get down to business. All right. Starting with the daily in the S&Ps, let's take a look at what we're seeing. And again, we may be hurry up and wait. I don't know. We're going to have to see what these things look like. Let's take a look. Okay. S&Ps, hope for peace. As long as those peace talks keep going, it seems as though our markets are a little bit buoyant. We have not yet broken structure to the downside. Yeah. Lacey, the risk manager. Yeah, she'll bite you if you take too much risk. We are, however, at the upper side of the channel, or the Danel, as we like to call them here, in honor of our friend Dan Hodgman. But again, downside structure does remain. Losing 17,000 in open interest on an up day yesterday doesn't scare me that much because, again, we are in rollover and we are going to be seeing about 500,000 contracts expire on Friday, which is quadruple witching day. We all know, or should know, the uncertainties and the things that we are waiting for to come out today. The war, of course, we're all well aware of that and continuing to pray for peace, I hope. The Fed, the economy, all of these things we know, and we know that we can't predict really anything. Anything can happen. ACH, that's our acronym for the market forecast and the recap lately. Anything can and usually will happen. We also have to remember how short traders' memories are. Only thing we can do is really trade what we see. Now, we know we've got a lot coming out today. There may be a lot of traders that are going to just kind of sit on their hands and wait. We've got a situation here where we do have a late spike yesterday. We put up a late spike. Closing price or settlement price 42.53.75. We've got a pretty decent long inventory. In other words, our short time frame, weaker hands traders are looking for this market to continue to move higher throughout the session today. Remember, we're kind of up against the top end of that channel. We've got last week's high here just above us, and then our weekly kickoff high, 43.64, just above that. So we've got a little bit of barriers to get through if we are going to move this market higher, and I'm not expecting something like that, at least not before the FOMC meeting information comes out. So the late spike base, I'm looking at the L period low here, 42.50. It's where the market really broke out of the balance and started to move higher, running out of time to find true acceptance before the close. So the rule for this is, if we open above the late spike, it's the strongest signal for continuation to the upside. That said, we also know that we've got important information coming out later in the day. I think it would be unusual for this market to really try and push considerably higher, knowing at 1 o'clock the FOMC meeting does come out. And I sound like a broken record when I say that, but it just rings true. We're at the upper end of the channel. For us to break out of that channel, it's going to take new business. It's going to take new business in the daytime frame to continue these longs for our overnight shorts. I'm looking for probably a higher probability of a push back down towards the gap close back towards settlement and back towards the late spike, then I am looking for continuation to the upside before 1 o'clock. All this overnight inventory to the long side already seems to be beginning to reconcile. And at the very least, you always have the decision to wait. You have the opportunity to say, it's a big day. I don't know what to do until after the FOMC or even after the FOMC meeting. The nice thing is we don't have to do anything today. There's nothing that says you must trade or none shall pass. We don't have to do anything. A lot of folks talking already about sitting on their hands and just watching today. And, if there's an opportunity, trade what you see. We can't predict what's going to happen. All we can do is take the market's information, use that to our advantage to limit our risk and look for asymmetric opportunities where the opportunity is greater for profit than the risk we have to take. Let's go and look now into crude oil so maybe we can catch the open. All right. We're coming into the roll. Tomorrow is switch day. That's scheduled to switch day. May come tomorrow, may come Friday. We'll be watching the volume to find out. The volume was a little bit higher, even in just the front month on this move to the downside, and there was an additional 1,400 contracts in open interest. Now, remember, we are in rollover, so the volume in the open interest is going to be a little bit blurrier during the 3 weeks that we're not in rollover in crude oil. Demand seems to be now in question. Now, we were talking over the last 3 weeks about how this auction process was not providing good, strong information, even into this big emotional move to the upside. We were losing open interest. It wasn't there was a lot of money coming in pushing this market higher. It was shorts getting out. It was an emotional move to the upside. Now we've got a bearish engulfing pattern. We've got a head and shoulders pattern. We broke out below the neckline yesterday. Our termination for this move to the downside is down here right around 75, 50, 76 bucks. If we continue that way. Now, remember, we're in rollovers. So they're, especially today and tomorrow, our longer time frame traders are really going to be trying to focus on getting a cheap roll instead of being directional. Doesn't mean that they can't get pushed into it. Okay, it's going to be difficult, I think, to really see a big continuation to the downside until after rollover. But again, ACH, anything can happen, and it is EIA day. We're in an inside range, inside extended trading hour range, and inside short time, largely inside of the regular trading hour range from yesterday. We're seeing the market pushing to the upside here. Perhaps we're starting to create a little overnight long inventory here just before the open. We've got our overnight high up here at 99.22. There's a gap between Friday and Monday and Tuesday's session. There's lots of visuals up here to go and recheck. We've got the point of control from Monday. We've got last week's low or high, whichever it was. And then we've got our weekly kickoff low, 104.30. Down below, we certainly know we have some more visuals to look for. So again, knowing it's EIA today at 9:30, probably going to be a little bit patient. Now we're just coming into the opening range. We're going to watch the opening range. Are we creating a gap here? If we create a gap and we leave the opening range to the low of the session, I would look for a relatively decent trade up here to point of control from Monday. It's almost a $3 move. And if we were to get up to weekly kickoff low, that's an even bigger move. Not suggesting that is by any way going to happen. Here's the opening range. Let's see what we do here. Here's our recent move to the upside in short time frame prior to the open. We've got just under 30 tick opening range so far. We've got about 20 seconds with which to finish the opening range. Go back in here and look at the 30-minute here just for a second. Where is the gap? The gap closes at 96.70. No, I'm sorry, 98.37. 98.37. I know what I'm looking at there. 98.37. So 37 right here is where we would close the gap. Okay, we've got our opening range established. 24 ticks, relatively small for the way it's been. Now, if we've taken our look up the upside, if we've taken our long, our stop, we move our stop a couple, 3-4 ticks below the opening range. We're not closing the gap right away. If we can't close the gap relatively early, we look for opportunities in the direction of the gap. And we've got an opening range trade that remains at least very early here at the bottom of the regular trading hour session range. Are we looking for a big move here? Are we going to see a big move before EIA? I'm thinking probably not. So we're going to go back and see how our opening range played itself out as we go along here. Now down to the Nasdaq. Nasdaq, okay, we're seeing hope for peace already. Again, we're not quite at the upper channel the way we are on the S&Ps, which have been presenting as stronger. We lost 17,000, same as in the S&Ps. In the Nasdaq, largely due to rollover. We're going to see our expiration happen on Friday. Quadruple witching. Going to see a whole bunch of open interest evaporate at that point. A lot of contracts are going to settle in cash. Unfortunately, as fortunate as it is that they're still talking and that there's hope for peace, it's not a strategy. Downside structure still remains. Can you guys think of anything important that's happening today? Is there maybe something that may keep us from getting too involved too early today? I can think of a couple of them. And again, remember, anything can happen. Here's the 30-minute. Okay, opening with a gap. We've got overnight inventory to the long side, settlement in the NASDAQ, 13,449.75. Is there any reason for us to really feel an urge to get into this early today? Other than the fact that we have a gap, other than the fact that we have a late spike. Again, we've got two nuances that are saying this market is set to head higher, and that's the gap to the upside and the late spike. The base of the late spike, 13,408. 13,408. It's when the market really left the range that was established throughout the day, and then had to close without spending enough time up there to mark acceptance. Opening above that range and above that late spike is the strongest signal for continuation to the upside. Doesn't mean it has to happen right away. Remember, we've got a whole lot of longs in this market, and if this market opens and does not drive price higher, a lot of these longs, especially today, are going to get nervous. They're going to get out, and they may give us better trade location if we are indeed going to look to the long side. Just because we opened above the late spike doesn't mean we can't return to the late spike for an opportunity to look for a long. So we've got weekly kickoff low here that we closed below on Monday. Yesterday, we broke out, closed back above it yesterday. We're seeing some continuation today, along with, thank goodness, for some hope for peace. Trade what we see. We cannot predict anything. Gold. All right. So almost similar as to crude oil, except we do have a island top up here. We've got basically three reversal patterns all happening at once. We've got a bearish engulfing pattern. We have an island top, and now we have a head and shoulders that we have broken the neckline to. That neckline may take us all the way down to this 200 session moving average on the 30-minute chart, which brings us down to 1840. That's a pretty substantial move. Yesterday, we ran into some resistance at weekly kickoff low, 1931, pretty much the high of the session yesterday. Our overnight high, 819, 2870, at least so far, that level remaining resistant, and I'm looking for that level to remain resistant or at the very least pivotal throughout the session today. What did we do? Well, settlement is up here, 2970, again, down below that 1931 weekly kickoff level. It was right to it here, back to it here, some pretty decent opportunities off that resistance level. Now, where are we? Well, we're maybe holding some overnight shorts, but we're right in value and in range from yesterday, suggesting to me that I don't need to get involved in anything very early here in gold because there's very little change in the perception of value. I'll be focusing on the extremes. Most importantly, the weekly kickoff low here, 1931, as an area for an opportunity to find some fish. Okay. I just got notice that President Zelensky is addressing Congress as we speak. Thank you, Rick. There it is. Yep, you got it. I'm not quite sure what to do. Do I shut up and do we watch it, or we just, let's finish the forecast, and I'm sure we're gonna be finding out what he has to say, and I'm very, very interested, as I know we all are. So we've got an inside day in gold, no overnight inventory, no gap, no runs, no hits, no errors, nobody left. Be patient. And to the euro. Okay. So the market is coiling. It continues to be coiling. We added 6,000 in open interest yesterday, which to me is a good sign of some potential energy coming into this market. You can see the higher lows. You can see the lower highs. We've got a little pennant formation going here, which may provide some decent opportunity. And again, I'm pleased that we brought in some open interest. However, inside of these levels, these lines, trend lines, it's still kind of largely on the back burner for me. I'm going to try and focus on those extremes because we are still, by all sense and by all reason, still controlled by short time frame traders. Short time frame traders do offer opportunities. Short time frame levels do hold when the market is being controlled by short time frame traders. Here's our trend line to the bottom. We've opened. We're in range. We're in value. We have some overnight longs in this market. It would make sense to me to see a rotation closer to the low of value from today, closer to our bottom trend line here today before looking for any opportunities. It's really these extremes that I'm focusing on before really starting to get into this market again. Now we've got a naked point of control from from Thursday that we've tried to check. We've checked it a couple of times in the overnight, but never in the regular trading hour session, that runs a fine line right down the middle of the area that we're looking for. So we're looking for opportunities. Not that interested yet here in the euro. All right. The 10-year breaking out, continuation. Losing 21,000 in open interest yesterday. I do find that interesting on an overlapping to lower range. Rates are going to begin to rise today. We're well aware of that. Open interest loss. Is that hedging? Is that posturing for anything that might happen today? Again, we can't predict. We got to trade what we see, and we have to remember to protect ourselves. Protect. Here's the 30. Okay, I believe we opened with a gap. Not sure if it remained. No real overnight inventory, however. And everybody that trades the Treasuries is gonna be either postured, hedged, or sitting on their hands today. At least I would if I would be. Trade what you see. Make sure you're protected, of course, but you have to see how things play. The natural gas seems adrift coming into its rollover. Seeing some pretty low volume here. We lost 5,600 in open interest yesterday. There's not a lot of money coming in. Of course, it is coming into rollover. Next week, it's in roll. Actually, it kind of starts today, or yesterday, or tomorrow, whatever you think rollover starts. So, traders, longer time traders, time frame traders will be seeking opportunities to get a cheap rollover or make some money off this rollover. Volume remains low. This market needs data. It is in short time frame control. Here, you'll take a look at the 30. A short time frame control. Well, yesterday we opened in range and value. We traded to basically the high of value or the high of the previous day's range. That's a short time frame level, which did hold. We took us down through value, which was a little bit of a hiccup, stutter step on the way down, through the value, through the range from yesterday to close a little bit lower. Are we holding any overnight inventory? We may just be accumulating that inventory now after the open, but do we have any real overnight inventory? I'm thinking not really. So really kind of the overnight low, it looks of interest to me. Overnight high, of course, looks of interest to me because it's relatively close to value low from yesterday, kind of basing opportunities and limiting risk off of short time frame levels. Take a look back at the opening range trade. We looked higher, we're back to it. If we can't close that gap, which was down to 98.36, and we're still looking for opportunities to the long side. I don't see that is a good bet, especially with the number of longer time frame reversal pattern situations that we've got going on. All right, one last thing. March 16th, 26 years ago today, I was doing this. There's me and my wife, 26 years ago today, on our wedding day. Happy anniversary, honey. I know you're probably not watching, but if you are, I love you dearly. All right. So we've got all that business on the past, past us now. 26 years seems like it's only been a week. Thanks, James. Rogue, happy anniversary. Thank you, Charles. James, I was surprised that somebody actually remembered that. Bill Phillips remembered that this morning. Thanks for remembering, Bill. Chris, good morning. Hope all is well. Hey, it's my pleasure, man. It's and I pray for all of us every day. Really appreciate that, Chris. Just looking at some of the questions. Best risk manager, right? Can I learn day trading at Top Step? Yeah, there's lots of information, a manual, lots of opportunities like this one, like the group coaching today at 1 o'clock, the recap, coach's playbook. There's oodles of information on our website, on our YouTube channel, which you're there now. Look at Top Step and look at the archives, look at the Trading Resources, Trading Foundation. Lots of great information on there. And again, you have the opportunity twice a week to hang out with me in group coaching and ask questions. And probably one of the best ways to start getting into it. Emil, thank you for letting him know that. Reminder, CL be flat 930 crude oil inventories if you are in step 2 or in a funded account, for sure. Do you use a continuous contract or none? What is best? Is it better to use none for a while around rollover and then switch to a continuous in a week or two? Trading research is a really good question. And I've had some considerable consternation about this in the past. And I tend to use the chart with the most relevant and newest information. So if I'm looking at a chart that maybe there's a rollover going on, or like in the S&Ps, we're going from March to June. I'm watching the June contract, not the continuous contract. And I will look at the June contract as long as I have valid information from it. As far as the continuous charts, I mean, if you're looking for information from months to years ago, that's when I look at the continuous chart. Also, to find, there's the death cross that happens and just recently happened in the S&Ps. I'm going to be looking for that to happen on the continuous chart. It's a really good question, and I like to use the most relevant information in the contract that I'm trading. Nico, all right, that's a good idea. I'll see if I can find some good examples of those opening drive, test drive. I'll take a look at those, see what I can find as far as some good examples of that. Good idea. You've got it. James, thank you very much. Charles Tachyon, yes. Deep breath and peace, yes. Otto, thank you. Linda, Vince, Tone, Lindsay, thank you all very much. Melly, Dr. Preston, Dr. Presto, Mr. Presto, I should say. James, Lindsay, Linda, Nico, and Gabo. James, thank you very much. Thank you all very much for the kind thoughts and the anniversary. Thanks and thank you all. Yeah, Jay Powell knew it was a special day. Sure, Scott saw and he conquered. Thank you very much, Dave. Rick, good. Thank you very much. Hey, you were there that day, I think. I remember you being there. Did not catch anything overnight or yesterday in the SPY. Leahy, thank you. Married the day before St. Patrick's Day. I did that on purpose, so I'd never forget. Yeah, see, that's the thing about the continuous. You're going to have a different high in the continuous than you are going to have on the actual chart. I like to use the actual chart for the month that I'm trading. Mess, do you expect a significant market reaction today with the Fed rate hike or do you feel it's already baked in at this point? No, this is not. No, sorry. This is a good question. I think baked in is a 25 basis point rise in interest rates. Not baked in, I think, is they're going to be a little bit of a shock if they go with 50 basis points. Nobody knows for sure what they're going to do, and even more important than that is the conversation that Jay Powell is going to have at 1:30 Central today of talking about their potential plans for the future. And once this comes out today, the rest of the Fed members are available and able to continue to speak. They're basically gagged for 2 weeks before the FOMC meeting. Once the FOMC meetings has happened, and they have the chairperson, they're allowed to start talking their yaps as well. So it's going to be an interesting day. Fred, if a question is asked, I believe anyone who provides an answer is trying to help. Oh yeah, absolutely, yes. And do remember, I think there was I can't really tell, but there was a little tension, maybe a little bit today, and just no reason for that. We'll just do our thing, and Fred's right. Sometimes with the limited amount of time we have here, sometimes people do answer questions, and so we all just try and get along. All right. Lacey is a regular guest star. You see a picture of your dog. Let's see if I have one handy. Oh, here she is. Here's Lacey. Giving us a little of the side eye there. But that's the... All right. Let's take our deep breath. Let go of any preconceptions. Trade what we see. Make sure we manage our risk. Let go of any anger or venom we are currently holding. It's not going to help us. It only hurts us. Keep praying. Take your deep breath. Boy, I hope you guys really do that. It always feels good to do that. Trade well today. Looking forward to seeing you for group coaching. Looking forward to seeing you on the recap. Be kind to each other. Be kind to yourselves. Get out there and profit today. Trade well. And see you in the proverbial trading pit here in just a few minutes. Get out there and trade well today. See you at 1. Make it 1:05 for coaching so you can watch the fireworks at 1 o'clock when the FOMC release comes out. Looking forward to seeing you there. Trade well.